Are you wondering how you can fix your FICO score? Maybe you're trying to buy a house and you want to improve your FICO score, or you've been turned down for a lease and you're turning to the internet to find out how to improve your credit. Well, in today's video, I'm going to answer the question, what is the FICO score? How is it calculated? And that information is going to give you empowerment to know what changes and actions you can take to improve your own credit in probably a short period of time. I'm so glad you're here, so stay tuned. Hey, Laura Gallen here with Mountain Prairie Living Empowered by ERA Shields, and welcome to my channel where I answer questions about the home buying and selling process, educating and empowering you through the process. And today's video, we're talking about the FICO credit score. And maybe you're here because you want to improve it or you've been turned down because of it. So first, let's talk about what is the FICO score calculated from. Learning that will help you realize that you can make changes in your lifestyle and your behaviors to quickly change your FICO credit score. So let's get into that. So let's break it down. Your FICO credit score is broken down into certain percentages, and it varies a little bit. But the first 35% is really simple. It's paying history. Paying on time. The more late payments you have, the lower your score drops. So to raise your credit score, continue to make payments on time, even if they're minimum. 35% of your credit score comes from payment history. The next big number is your credit use. So let's talk about this. 30% of your score comes from this. And I'll use an example. If you have a credit card that you've been extended $1,000, but you continually use that credit card and you keep the balance up at about 800 or 900, or sometimes you go over the limit, that's going to lower your FICO score. So what they look for is 10% or less use of your credit. So on that $1,000 card, if you had a $100 balance and you paid it off each month, that would help improve your credit score. So the very first behavior you can do is just stop using it and pay it down, and not necessarily pay it off, but try to get it low, at least 10%. Now, 15% of your credit score comes from the history, the length of time you've had credit. So if you do pay off that credit card or that car loan, you want to make sure that you leave it on your credit report. Don't close out the account, because the length of credit will continue to grow the longer you have credit accounts. So don't close out those accounts that you pay off. Just leave them there, because it will improve the length of your credit history. Now, 10% is one that you can control. It's about how often you increase your credit. So if you continually get a card from a department store here, then you get a small credit card here, and you're continually increasing credit accounts, that's going to decrease your credit score. So get some good solid accounts, keep them, and try not to add a whole bunch to them, but just continue to pay on them regularly. Leave the length of credit, it'll continue to grow, rather than continually adding new credit. Now, the other 10% is made up of the mix of credit. So they're looking for a mix of credit: personal loans, installment loans, revolving credit, which is a credit card. Installment loans would be something like a car loan, and just maybe a home loan. So they're looking for a nice mix of credit. Now, initially, if you're establishing your credit, you may not have that right away, but slowly begin to add credit accounts that offer you the opportunity to create a little bit more mix. So why is the FICO score so important and valuable to you? Well, you are probably watching this video because you've been maybe declined for a few things, and you're realizing, what's going on? What is this FICO score and how is it made up? Now that you know the information as to how it's made up, you can take control over some of your actions and behaviors to improve that credit score. But who uses that? Well, of course, anybody you're asking for credit from. So a home loan, a car loan, a personal loan, a bank loan. But you'd be surprised, your insurance company also uses your credit score. They did a bunch of studies and figured out that people with a lower credit score were more likely to use their insurance and file claims on it for cars or for homes. So the lower your credit score, the higher your insurance costs are. And on that same note, if you improve your FICO credit score, you're going to save yourself lots of money over time because you're going to have access to the lower interest rates offered, which of course is going to save you money on the entire payment of that particular credit that you're asking for. So increasing your FICO score and learning how to take care of your credit is going to save you money in the long run and open more doors for you. If you're finding value in this information, I'm so glad you're here. Give this video a thumbs up and subscribe to the channel. Let's continue with some tips and some ideas of how to maintain your credit and improve your credit, and a little trick I learned from a lender. So let's talk about that. So we talked about paying on time, making sure you're paying down the extended credit that you have out there, not adding any more additional credit to your balances, but also if you have a family member who has a credit card that has a length of time that's longer than the credit you have, the credit history that you have, and they will add you to that account, that can quickly change your credit score because that length of credit that they have is going on to your credit report, and that extended credit that they have will increase the amount of extended credit that you have, changing that percentage of use of credit to extended credit that is there. So that's a quick way, and I'm certainly not a lender, but that was a tip I got from a lender for a client that I had. Here's another tip. If you have a medical bill, this is something that we commonly see, and you look at the bill and you say, I can't pay that, it's too huge. Communication with your creditors is so important and it's so valuable. Now, if you call a medical company or a medical bill company and you say, you know what, I can't pay that, I need a payment plan, there's not going to be interest charged on that. So they'll work with you. Now, typically they're going to want you to pay it off in 10 months or 12 months. Push back and let them know that in my finances, I simply can't do that. Make a payment plan with them and then execute on it. If you set up a payment plan and then you default on it, that's even going to look worse. But think about that. You don't have to put it on a credit card. You can actually just set up a payment plan, not pay any more interest on that money, and pay that off. And it's much better than getting a collection account for a medical bill. So communication with your creditors is so important. If you get in a bind or your finances change, pick up the phone and call them. Protect your credit at all means the best you can. Here's another quick tip. If you're really focusing on trying to improve your credit to buy a house, look around. Do you have some things of value that you don't use anymore or that you really don't need that you could sell? Take that and pay down some of that credit. That's quickly going to increase your credit score as you pay down extended credit. So look around the house. Can you make a quick shift, sell something, and put that money towards paying down your extended credit? And the last thing is, try to stay within your means. Pay cash as much as possible. Now, I know we're coming into an inflationary time and we're probably going to hit a recession, so it's going to be quite challenging, but really try to live within your means. Take control of your credit because it's such a valuable part of getting ahead in this life. So if you want to take control of it, take these tips, take this information, and utilize it to your best potential. I'm so glad you were here watching the video. It's such an important thing to know and learn and understand because credit really does open doors. Congratulations on trying to learn more about your credit. I'm so glad you're here. Thanks so much for watching. If you'd like to know more about how to calculate your debt to income ratio to see how close you are to qualifying for a loan, then check out this video next where I go into the calculation of that. Thanks so much for watching. Have a great day.